The stock market is crashing today, and many investors wonder what's causing this sudden drop. Is it related to global tensions? Or is it something bigger? With Trump and Zelensky's political feud escalating, the market is reacting. Stick around to understand what's driving the market down and how this might impact you. Hey everyone, welcome back. In today's video, we're discussing the big question: why is the stock market crashing on Monday? From the ongoing Trump-Zelenski political drama to concerns over global markets, today's drop is making headlines. I'll explain the decline and what you need to know to navigate these turbulent times. If you haven't already, don't forget to hit that subscribe button for more updates on market trends and financial insights. In case you haven't been following the latest political drama, Trump and Zelensky are once again at the center of controversy. The two leaders have had a turbulent relationship, but recent developments are intensifying the situation. Trump's ongoing legal issues and his criticism of Zelensky are causing significant friction. Now, this might not sound like a typical stock market story, but here's the catch: any political instability in key international relations often sends shockwaves through global markets. Trump-Zelensky fight impact: how global politics affect the stock market. When investors see politicians at odds, especially when it involves a nation like Ukraine, which plays a strategic role in Europe, it creates a ripple effect. People start pulling their investments out of riskier assets like stocks because they fear more uncertainty and potentially damaging consequences on a global scale. The stock market isn't having a good day today. Major indices are down and investors are feeling the heat. So why is this happening? Well, the stock market is highly sensitive to various factors, and one of the main drivers today is fear. Fear of global instability and economic slowdown. Markets tend to react sharply to both political and economic uncertainty. Stock market crash on Monday. What's causing the dip? With rising inflation, increasing interest rates, and slowing global growth, the market is already in a fragile state. But it's not just the numbers. Political tensions, particularly between President Trump and Ukrainian President Zelensky, are adding to the mix. When investors sense instability, they tend to pull back from riskier investments, which results in these sharp drops we're seeing right now. The Trump-Zelensky conflict. Now, let's take a closer look at the Trump-Zelensky situation. Their ongoing conflict has made global headlines recently. While political feuds between world leaders don't always impact the market directly, the current tension is different. Trump's comments and legal battles, coupled with the uncertainty in Ukraine, are sending ripples through the market. Trump-Zelensky fight impact: why politics affect stock. Investors are closely watching this political dynamic because it could lead to disruptions in international relations. For example, if tensions escalate, it might affect trade agreements, influence energy prices, or create uncertainty in other global markets. And when the world is uncertain, the stock market doesn't like it. Investors are pulling back, which is why we're seeing this drop. Beyond politics, we also need to consider the broader economic environment. The Federal Reserve's decision to raise interest rates in an attempt to curb inflation has created a tougher environment for businesses and consumers alike. As borrowing becomes more expensive, it's harder for companies to invest in growth. Why is the market going down today? The economic factors at play. We're also seeing the aftereffects of a slowing global economy. Markets tend to react to these shifts, especially when investors start to fear a potential recession. With the rise in interest rates, high inflation, and global supply chain issues, it's no surprise that the market is showing signs of volatility. Now that we understand the immediate causes behind today's market decline, what's next? Will this continue, or is this just a short-term dip? It's hard to say for sure, but history tells us that the stock market tends to recover after these drops. Volatility is a natural part of investing, and while the short-term outlook may be shaky, the long-term outlook could remain positive. Why the market could recover after today's dip? It's important to keep perspective. The market has faced corrections before, and it will face them again. As an investor, it's essential to avoid panic selling. Instead, focus on long-term strategies and make sure you're diversified in your investments. Remember, these market fluctuations could present opportunities for those who remain calm and patient. To summarize, today's stock market drop is driven by a combination of factors: political tensions, economic concerns, and investor fear. While it's important to be cautious, it's also crucial to stay informed and remember that market dips are often temporary. Stay focused on your long-term goals and continue to monitor the news. If you found this video helpful, please hit that like button, and don't forget to subscribe for more insights on market trends and financial updates. Keep calm, stay informed, and keep your investments strong. See you in the next video.